Hello, this is Mark from TradeInform.com and welcome to this video on another Forex Fibonacci trading strategy. This is actually the second part in a two-part series. The first video called How to Calculate Fibonacci Retracements Automatically. There's a link on the screen to this. I discussed and I demonstrated the method that I use for calculating Fibonacci retracements using Excel. But in this video, what I'm going to show is a way of putting Fibonacci retracements into action in a trading strategy. And also, I wanted to look at the actual results that we get from the trading strategy. Now I'm going to be testing it today on the Aussie US dollar Forex pair. And firstly, I'm going to describe the actual trading strategy. This is a nice, simple Fibonacci trading strategy. The first part is identify the dominant trend, identify the direction that we think the market is going to continue in, and then wait for a retracement before entering in the direction of the dominant trend. So to do the first part of this, we need a way to identify the trend, and for this I'm using linear regression line. And this is actually this line, which is the central line of the standard deviation channels. And I'm just going to say that if this is pointing upwards, we're in a long trend. And if this is pointing downwards, if we have a negative value, then we're in a short trend. So our retracements are going to look a bit like this. We have a move, strong move to the upside. We've identified that the dominant trend is to the upside. We have a retracement, in this case to the 38.2% level, before continuing in the original direction. Now we can do exactly the same thing for a short trend. We've identified that the market is short, so we have our Fibonacci levels here. We have a retracement again to the 38.2% level before we continue in the direction of the original trend. Now I'm going to demonstrate the calculations using a trade-informed backtest model, and this is a trade-informed backtest model. We have the price data over here on the left. We have our technical indicators, or our way of identifying market patterns, here in the center. And then we have over here on the right the way that our backtest is actually carried out for long and short trades. Now, these are actually a very accessible way of anybody that has got some Excel skills can actually test their own trading strategies. You can use whatever market you like, you can use whatever time frame you like, plug in technical indicators and test different types of entry strategies, different types of stop losses and profit targets. Now this spreadsheet is actually available on the TradeInformed website, and there is a link on the screen if you would like to find out more about this. So in this case we have our long Fibonacci retracements and we have our short Fibonacci retracements. Now these are actually, here I've got identified the, let's stick this at 38.2%. So we're matching what we just saw on the screen. We have a long entry here. And this is the first of the two trades. And we can see that this trade actually continued on for some considerable time, before it closed actually with a profit and entered immediately short, which is the second of the two trades that I showed. This one here. Rather, this one here entering here. And this second trade also made a profit. In fact, it made a very nice profit. We actually hit our profit target. So these are the results that I got from the trading strategy. You can see here that I've set up starting capital of $100,000. I've set the leverage to 1. This means that we're actually considering this as a fully invested strategy. Of course, Forex in particular, it's easy to trade with increased leverage, and if we increase the leverage, we're going to get different results. But I'm just interested here in the actual strategy itself, how well it works, and not really too bothered about the effects of leverage. And I've kept this nice and simple. I've got a profit target to stop loss, a reward to risk ratio of 2:1, using a profit target and a stop loss as our main ways of closing these trades. I could change these, I could set up a trailing stop as well, and we will get different results. Now here we've got a way of adjusting the Fibonacci levels. Now the Fibonacci levels will, I'm pretty sure, vary. The ideal levels are going to vary from one market to the next. In this case, I'm looking at the 38.2% retracement. So this is quite an aggressive entry. We're looking to get in pretty quickly. We're looking for fast-moving trades that only retrace a relatively small amount before continuing strongly in the original direction. I could easily take the 61.8% or even the 100%, and we would still get some results. So put it back to 38.2%. Now these are the results for long and short and combined that we got for this trading strategy. We're looking at some things I particularly like about this. Our drawdown is very low, considering this is on the daily time frame and over quite a long period of time. We've gone from 2007 to October 2015, so we have a good amount of data, 8 years amount of data. We've got a good win percentage. Anything over 50% for me is very good. We've got 53% here, and because we've got a nice reward to risk ratio, we're actually showing a higher winning trade compared to our largest losing trade, which is what we would expect. Our average profit for trade, 2,400. And our expectancy that I'm showing here, 2.1% for our long trades and 3.2% for our short trades. So we've got quite a nice trading strategy here. If you'd like more information about any of trading using Excel and the financial market in general, please hit the subscribe button. Please don't hesitate to comment on this video, and please go to www.tradeinformed.com.